Good afternoon, traders. Let's start our Sunday morning review. My congratulations for all fathers. Today we have International Father's Day. And today I will observe instruments, forecasts, which I gave on the previous week. And we'll make few predictions for the next week in copper, cocoa, and New Zealand dollar. So let's start from oil. First of all, from crude oil. Because the previous week we stopped trading in this point where HFTs were created, and I told we will go to the upside. But from Monday went sharply to the downside, broke the level of support demand level and went lower. By the way, this divergence of deltas not so significant, but was created, and on Monday close we saw HFT's volumes with a duration almost 2 seconds plastic chain, and also the market closed below this level where HFTs were created. These points of HFT volumes are places where fast market orders with big ticks meet with limit orders of market maker, and so that are the places with high interest of big players, and so places where it is possible to make our decisions. So on Tuesday the market opened at the same level and fixed above these HFTs which were created on Monday. And then on Tuesday the market went to the upside. On Wednesday we saw the pullback and one more attempt of rally, and then on Friday also. So that point was a good opportunity for buyers. And also the same picture on the bottom of the market we saw on the Brent oil. Also, I made focus that the market will go to the upside from this point, but on Monday market opened below, went sharply to the downside, broke the demand level. HFTs were created, then fast reaction, one more involvement attempt, and more strong reaction on Tuesday to the upside. So also beautiful entry point after divergence of deltas we had on Monday close. The second prediction was in natural gas, and it went absolutely according to my view. If this commercial level will be broken, it is level 2.315, this ask zone. If it will be broken, they will continue to purchase. So the market will go to the upside. I even expect that it will go to the upside from here, because often I see when hedgers become disappointed in some price movement, and they are really disappointed now if they closed their purchases, the market start to move in that direction. I think that there will be the third wave after this imbalance which we see on the options market was here in block trades, and here on the futures market. So that was the first volatile wave, now the correction, and then there will be the third wave. And after some correction under this level we saw very significant and valuable movement to the upside, even stronger than I expected. And it is very important that this movement happened after these put block trades where traders hedged their positions on the bottom of the market as they were frightened that natural gas will crash more. And these points of the highest emotional pressure in options market, and also high emotional pressure we saw on the futures market, here in this point, very strong bids imbalance, they often cause market reversals. So don't overlook such market opportunities, because they are really unique for making trading decisions. And now focus, what I want to show you, traders. First of all, copper. During the week I made a bet that the market will go to the downside after these HFT volumes which were created on the market top after the divergence of deltas, which was before here. And by the way, during the market movement, we had this bid imbalance on the market top. Market went to the downside, retested this level, technical level, and started to return. So I exited in break even. Often such information, bid imbalance on market top or on some level, tell us that this level with high probability will be broken. You need to remember this. So it was broken and now the market returned. Because here was a zone of the orders. The market needed to activate it. And now from this zone I predict that we will have the movement to the downside in Cooper, and we will have some correction at least to break this 3.8 level. And you see that hedge funds liquidated their short position, very valuable liquidation of the short position, and often after such liquidations the market make additional corrections, as we saw in natural gas. I showed you the previous week that here was a liquidation of market buys, this correction, and then market went to the upside. That was one of the reasons why I took my attention to natural gas, these changings in COT data, in positions of hedge funds. So in Cooper I see the liquidation of shorts, and now, of course, matching this information with a lower time frame, we can tell for ourselves that the path of least resistance in Cooper can be to the downside, at least to make some short-term swing trade. Then traders, I want to show you the picture in New Zealand dollar here. I don't know the reason, but I see very important increasement of non-reportable positions of small traders. As you see, the third week in a row they short, and they really here were involved in this shorting trap and now are squeezing. And after these huge divergences of deltas and these bids HFTs were created, I see that for a while there will be some movement to the upside. I don't know really the target. Maybe this level will be broken, 0.6318, because some liquidity on this level, of course, is settled. Maybe it's too far, but for now, this bids imbalance will cause the market growth. We will see the information from the order flow to understand where, in which zone, the liquidity of sellers, their stop losses will be activated, and we will reach the balance of the market. Because as you see, the short position of small traders was increased by 86%. It's very, very big short. Here, last time was such increasement, and we saw that the market here from this extreme short went to the upside and touched liquidity which was settled upper than the high of the previous wave. And so I think that here will be the same picture, that we will achieve the high of this wave. You know, pictures work on the market, and if we compare it with the information from the order flow and COT data, we can predict with high probability the targets and what will happen on the market during days or weeks. So please use it to make your trading more confident. And the last thing that I want to show you today, cocoa. Very strong uptrend we saw on the cocoa market last half of the year, even more, and now we have interesting situation. First of all, take attention that the positions of hedge fund were increased by 17%. It is the biggest increasement during last 3 months. So we really have enough energy here. And on the 15-minute chart, we see a picture where the uptrend line is created with bid imbalance, with bid HFTs imbalance. It is very important because when uptrend line is created with these imbalances, very high probability that if the last imbalance will be broken, we will see the movement to the downside. So I match this point as the ice line. Why the ice line? Because if it will be broken, the market will make fast movement to the downside, and we will see a correction. And our swing target is at least this commercial level where positions of hedgers and hedge funds were increased significantly. The price, like a magnet, will achieve this commercial level. So traders, thank you for your watching. If you like this video, please subscribe to my YouTube channel and receive such order flow and volumetric market overview every week to be acquainted with such market approach, because it is really valuable, it is fundamental, based on objective facts. You can combine it with technical analysis to see the whole picture of the market. And see you on the other side the next week. Goodbye.